Silver just hit its highest price in over 13 years, and barely anyone's talking about it. But here's the thing, this isn't just another price spike, it's a signal that something much bigger is happening beneath the surface of the global economy. And whether you invest in metals or not, what happens next could directly affect your wallet, your job, and your future. In the next few minutes, we'll break down why silver is skyrocketing, what it reveals about the financial world, and whether now is the time to buy, hold, or stay away. And trust me, this isn't just for metalheads, it's for anyone who wants to protect their money in uncertain times. Before we dive in, if you're into content that helps you understand money, markets, and smart investing without the jargon, hit that subscribe button. It really helps the channel grow and keeps this content coming. On June 5th, 2025, silver prices climbed above $36 an ounce, the highest level since February 2012. It closed at $35.81, already up 22% since January. For comparison, gold, everyone's favorite precious metal, is up 28%, but silver is closing that gap fast. And here's where things get interesting. This wasn't just a fluke. Volume surged, prices rose globally, in pounds, euros, yen, and gold, it actually dropped that day. So what made silver break out? Why silver is going up? 5 key reasons. 1. Industrial demand is exploding. Unlike gold, silver is an industrial metal. It's in everything: solar panels, EVs, smartphones, semiconductors. As the world races toward clean energy and electrification, silver is suddenly not just valuable, it's essential. 2. Supply shortage. Price pressure. According to the Silver Institute, global demand has outpaced supply for 5 straight years. In 2024, the deficit was around 15%. That's like trying to fill a pool with a garden hose. Eventually, pressure builds. And in silver markets, that pressure shows up as price spikes. 3. Thin market. Big moves. Silver is a much thinner market than gold. That means it takes less money to move it. So when demand kicks in, even modestly, silver can pop fast. That's what we saw on June 5th. 4. The gold-silver ratio shift. For years, the gold-silver ratio was over 100. That means it took 100 ounces of silver to buy 1 ounce of gold. But now, it's dropped to 94, a significant shift. That's triggered something called ratio trading, where investors sell gold and buy silver, seeing it as undervalued. 5. Geopolitical and economic undercurrents. Same day, silver spiked. A phone call between Trump and China's President Xi, signaling easing trade tensions. Normally, easing tensions pushes investors away from safe havens like gold, and that happened. Gold fell. But silver? It surged. Because it's not just a safe haven, it's an industrial workhorse. It lives in both worlds. When silver jumps, it's never just about traders clicking buttons. It reflects real-world policies and global shifts. Liberation Day tariffs. Trump. Earlier this year, former President Trump announced new tariffs targeting foreign manufacturing. While aimed at helping U.S. industries, they rattled global commodity markets, silver included. Biden administration's clean energy push, incentives for solar expansion, EV infrastructure, and semiconductor manufacturing are quietly driving up silver demand. Both administrations, despite political differences, have backed silver-heavy industries. That's long-term demand, backed by policy. Okay, so silver's climbing. But should you actually invest in it? Let's break down the smart strategies. Reasons to consider. Silver. Inflation hedge. Silver is a tangible asset that holds value during currency devaluation. Portfolio diversification. Silver doesn't always move with stocks, offering balance. Industrial upside. Demand will likely continue rising due to EVs, solar, and AI-driven electronics. Warnings before you jump in. Volatility. Silver can be a roller coaster, quick to rise, quick to fall. Not passive income. Unlike dividend stocks or real estate, silver doesn't generate cash flow. Storage and liquidity. Physical silver needs secure storage. ETFs or mining stocks offer easier exposure, but carry their own risks. Can silver hit $50 again, like it did in 2011 or even 1980? Some analysts say yes, but only if dramatic global events unfold. Others believe we're nearing a short-term peak, especially if demand slows or supply catches up. But here's the bottom line. The fundamentals, clean energy, digital infrastructure, and tight supply, point to long-term strength. So what can you actually do with all of this? Simple next steps. Start watching silver ETFs. SLV and SILJ are two popular options. Track the gold-silver ratio. Anything under 90 suggests silver may still be undervalued. Set a price alert. Don't buy into hype. Let price come to you. Research physical bullion. If you're in it for the long haul, consider buying and storing physical silver securely. Diversify with mining stocks. Companies like First Majestic or Pan American Silver offer leveraged exposure, but also more risk. And remember, don't bet your whole portfolio on any single asset. Silver should be a slice, not the whole pie. If this helped you understand what's really driving silver prices and how it might affect your finances, go ahead and give this video a like. It tells YouTube to show this to more people. And if you want more breakdowns of markets, money, and how to protect your wealth, subscribe and turn on notifications. I post new content every week to keep you one step ahead. Drop a comment below. Is silver part of your portfolio, or is this your first time even thinking about it? I read every comment, and I'd love to hear your thoughts.